Well, it says that I am live, although I want to double check. Yeah, as you can tell, all this live streaming stuff is new to me. That is if I'm on right now. Let's double check here. Oh yeah, I'm on. Drop a comment if you can hear my voice. Hopefully the audio is better because oh yeah, I'm live. Alright, cool. Alright. Let's kick this shit off. Welcome in. Cheers to the Bitcoin Crypto Happy Hour, number 3. I am your host, the Crypto Bull God. And I wanted to thank everybody for tuning in today. I am thankfully further along in my recovery of some health items, some health issues that I mentioned to the community earlier. I'm further along than I had anticipated being, which is great. I am positive and remaining very optimistic that I'll make like a 95 to 99% recovery by the end of this month. Somewhere around 95%. Fixated on numbers because I'm a numbers person. I'm an actuary. But no, I mean, even the progress and everything over the past week, 2 weeks has been great. So did not think I'd be going on camera today, but I'm happy. It's a big deal that I can actually go on camera today. So very much looking forward to getting into a lot of items today. Thank you for everybody who's tuning in. If you could, please like the video and drop a comment, interact with me. As always, I'll be doing a TA Q&A towards the end of this segment. So yeah, but to support the channel, make sure you're sharing it with others. Drop a like and a comment. I'll probably repeat that a few times and be annoying throughout the live stream. So, but thank you for everybody tuning in. I don't know what everyone has been up to for the 4th of July weekend, but let's kind of start there. So, 4th of July weekend, took a road trip. I'll have to mention the drink then after I get done with this piece. It's a very good drink. It's a new drink that I've been introduced to. So took a road trip with the Crypto Bull Goddess, and we went up to the Carolinas. In particular, we went up to the South Carolina area, as well as Asheville, North Carolina. For anyone who has not been in that region, it's crazy because I live in Florida, as you know. I'm in South Florida. The Crypto Bull Goddess is in Northern Florida. And for all this time that I've spent in Florida, I've never visited the Carolinas. I know it's terrible. Even when I lived in the Northeast, I just never visited the Carolinas. I always heard they were beautiful. That part of the country was beautiful. Curious if anybody listening is from Carolina. That'd be pretty funny. From the Carolinas. But went to a town called Asheville, North Carolina. And very beautiful area. Very beautiful area. Stayed in a bed and breakfast. Shout out to I can't remember the name of the bed and breakfast that we stayed at. I think it was the Princess Anne Hotel. Really nice bed and breakfast. They did a kick-ass job with breakfast in the morning. Great place. Really nice setup. Small town community feel, real good. And I'm just kind of looking. When you're traveling, as you can see, I'm not in my normal habitat. It's kind of makeshift here. I have a second laptop on the side here that I have an agenda written up. So if you see me looking off to the right, that's what's going on. But wanted to make sure to be somewhat organized for today. So, but yeah. So one of the places that we visited when we were in Asheville, North Carolina, was the Biltmore Estates. Curious if anybody's been there. It's pretty touristy. A lot of people know about it. I know I had a former manager that I reported to who had gone there, and it's beautiful. Like, it literally looks like Batman's mansion. I mean, the thing is beautiful. They have beautiful gardens, but the prices were not beautiful. So I paid, I want to say, oh man, what was it? Per person, it was over $100. And what that got us, and I did not realize this when I purchased the tickets. I thought we were going to go into the Pat Cave there. I thought we were actually going to go into the house, that large house. What that got us was the opportunity to walk around the gardens and do a wine tasting experience, which was a lot of fun. It was really nice. But a little salty about the price because it didn't even give us admission into the house. So be aware, if you do visit the Biltmore Estates, make sure you check the prices and know what you're paying for, because there was definitely a miscommunication in terms of what we would have access to. So we got to look at it. We got to take some photos, which was great. We met a couple there who were kind enough to take some nice photos of us, but did not get admission into the estate. But either way, it was a nice time. The wine tasting was a good experience. Got a few bottles from there. I'm trying to think the most unique wine. I'm trying to think of the most unique wine from there. I don't recall that one, but I will say our favorite winery that we went to. We're both wine connoisseurs. My favorite, or our favorite, that we went to was actually in South Carolina. It was in Simpsonville. It was called Citygate. So Citygate, you have to check them out. So if you're in the South Carolina area, anywhere near Greenville or Simpsonville, you have to check out Citygate. They do a great job. They're very personable. They'll even tailor your wine tasting experience. It's in a beautiful location. Has a really nice, like I said, personable feel to it. We purchased, I think, 6 bottles of wine from there. I mean, they had great wine. Really like the strawberry Sauvignon Blanc. The strawberry Sauvignon Blanc. Yeah, CBG does drink wine. He loves wine. So, but we got a few bottles from there. It was really good. And we had a great experience. Very nice person. Husband and wife who own that winery. The wife was helping us try to locate different wineries and breweries in the area to visit while we were there. So one of the other places, the last place that I'll touch on, is Wicked Weed Brewery. So we went to Wicked Weed Brewery, and I forget, I had a sour there. I do like sour beers, and there was a sour there that was really good. It was a habanero. I think it was mango habanero sour, and it was phenomenal. And but they had some good beers there, so we had a great time. The only thing we didn't get to do on our trip was some hiking. They have different mountains in the areas, different locations that you can visit to check out waterfalls, and it just, with everything else kind of going on and how we were spending our time, it was the one thing we did not have an opportunity to do. So this feels good. I can actually even talk better. This feels good to be able to talk at a fast rate. Could not do this a couple weeks ago. But we do plan on our next trip there to check out some hiking trails, but didn't have an opportunity to do that. I guess the last thing I would mention on that trip real quick before we actually start getting into some other items. We did check out a place called Chop House 47. So Chop House 47 is I want you to envision an extremely romantic, dimly lit steakhouse. Now, I don't eat red meat. It's the one dietary restriction I have, and the Crypto Bull Goddess also, especially since we've been seeing each other. She's eaten. I don't think she's had any red meat since we've been together, but doesn't really eat red meat either. But you go to a steakhouse, they always have fish, right? They always have fish and seafood items. But we didn't plan on going there. It was just one of those things where we were looking for somewhere to eat, and the mistake I made was I said, "Hey babe, you pick a place." That's a mistake. Bro tip: don't let your girl decide where you want to go to eat. Take the ownership, because she chose the most expensive place in the area. I'm already low on Satoshis, and she chose. So we weren't. So not only was it a super expensive place, but we weren't properly dressed, which was the funniest thing. We were not dressed properly for this place. We felt so out. I don't think we really gave a shit at that point because we were so hungry. But we were not properly dressed for this place, so we had a good time laughing about that. And that's a good segue into the drink this evening. So the drink, which the bartender poured it like this, everything was very, like, I'm telling you, like, you do want to check out Chop House 47 if you're in the Carolina Southeast region there. They do a great job. Great place to take a date. But where was I going with that? Yeah, the manners of the waiter. I mean, it was just one of those places where you really were paying for the experience, not just the food. The food was incredible. Don't get me wrong, the food was incredible, but you're paying for the experience. So the waiter was, pouring us our little drink like this in a swirl motion, which was kind of funny. We see the humor in life with certain things, especially the older I've gotten. I just see the humor with certain things. But anyway, we had this drink, and it is called a Brooklyn. So let me share with you what is in a Brooklyn. Cheers! Drop in the comments. I see I have a few comments that I'll get to here shortly. Drop in the comments what you're having to drink this evening. Please share. CBG would like to know. And if the Crypto Fearbringer is out there, I certainly would like to know what he's drinking. Hopefully he's joining the live stream. Hopefully my brother is joining the live stream. Guess we'll find out if he drops a comment. But so let's share what's in this tasty, tasty drink that'll get you toasty, toasty, toasty in a few seconds. Exaggeration, a few minutes. One of those drinks is all you need. That's all I'm having this evening. Maybe. But what's in that is the most important ingredient is your bourbon, your whiskey. They say they call for a rye if you want to do that. And I love whiskey. I mean, look at the thumbnail on my YouTube. So that's your first key ingredient. Your next key ingredient is your dry vermouth, a little bit of dry vermouth. Maraschino liqueur, which I've never had before. Maybe I've had it in a drink, unbeknownst to me, never had it before. And then amaretto liqueur. You just shake that bad boy up with some ice, and then you pour it. It's very good, very tasty. I taste hints of cherry and amaretto with a little bit of whiskey, and it's very, very good. So drop a comment, let me know what you guys are having, and let's see what we got so far here. So. Yeah, so Kevin, appreciate the comment. Kevin Bolin, yeah, it was a sight to see, right? Sight to see, looked beautiful, but the prices were a little outrageous. I made a joke after I paid over $100 just for myself and over $100 for the Crypto Bull Goddess that this better be the best damn wine that I've ever had, because it essentially was for a wine tasting. Kayleen, love me some red meat. Just kidding. Yeah, red meat, I've been off that since age 23, just read about all the risks with heart disease and stuff and aging, and just cut it out cold turkey. But on a side note, actually, I'm planning to check out at some point for someone's certain birthday, a senior member of a certain person's family who's hitting a key age in life, maybe going to Fogo de Chao. And may just cut out the red meat for that night, the no red meat for that night, and actually have a few lean cuts, which I haven't done since, like I said, 23. Kevin, I need enough red meat for the both of us. Good, because I have not. How about that inflation? How much has steak gone up? We're gonna get into that a little bit. So, the last thing before we start getting into some things surrounding the economy and some things surrounding crypto, some things that are less interesting or more interesting, depending on, if you're tuning into this channel, you find it interesting, right? The last thing I wanted to hit everybody up for is it's a little bit of a road trip. It's a little bit of a road trip from northern Florida, which is where we departed from, to the Carolinas. So what I put together was a top 5 list, and I may do this every week, top 5 list of some sort. I put together a top 5 list of driving frustrations depending upon the type of car you're also driving. So this is in no particular order. All right, number 1, riding the passing lane. This is probably the one that irritates me most. The left lane is to pass people. Unlike my father, who feels that you should drive at a speed you feel comfortable with, meaning driving slow, in the left lane holding up 30 cars behind you, that's not the purpose. We move over to the right lane and we drive at whatever speed we want. If we want to pass someone, we go in the left lane. So that was definitely the biggest irritation when you're in like a 6-hour car drive. Number 2, this is related. Passing someone in the non-passing lane and then they speed up. There's some sort of sense of control this person wants to have over you, that they're recognizing you're passing them in the lane you shouldn't be passing them because they're driving too fucking slow, and so now they want to speed up to make a point that you shouldn't pass them. Go fuck yourself. All right, number 3, rubbernecking. So there's an accident on the road. I know things can get a little hairy out there. We saw quite a few accidents. Move along, especially when it's on the opposite side of the road. There's no reason to slow down. There's literally no reason to pump the brakes and slow down to 40 miles an hour in a 70 mile per hour speed limit zone. Rubbernecking, turning your neck to observe accidents. Number 4, this is a big one in Florida. Don't know if you guys have this one, but the no turn signal thing. The no turn signal thing is especially when you're driving at high speeds, it's a little unsafe not to use a turn signal. So just going to throw it out there that no turn signals is a little bit of a, little rough, little frustration. And number 5, and again, this is depending on the car you're driving. If it's really hot out and it's the summer, let's say, I don't know, July 4th weekend, and you're driving with a car with AC that just doesn't want to seem to get cold enough or have the proper ventilation to actually blow air on you, that is a huge, huge deal. So that is my top 5 list of driving frustrations on a long road trip, depending upon what car you're driving. Now, with that being said, let's close out of this bad boy. And let's actually get into conversations surrounding, the first thing I wanted to get into is just the economic environment. Wanted to kind of hit on some things because I had a few different points. All this stuff is obviously going to relate to crypto. Again, I appreciate everyone tuning in. If you can, looks like Bitcoin's already up 3.5% here. We're going to hit on that one with the CPI report that came in and my thoughts there. If you can, let's not go to let's not go there. Let's not go to an Indeed job search. That wouldn't be good to look at, right? If you can, drop a like, leave a comment, and subscribe to the channel. Also, share it with others. Really would appreciate it if you appreciate the content. Try my best to talk everything crypto related and then some other interesting things as well. So I wanted to spend a little bit of time talking about the economy, the CPI, the inflation, the consumer price index, the amount of inflation that is being reported, the amount of inflation that you're feeling. I mean, it is everywhere, right? I had spoken, if you're a subscriber of the channel and you've seen some of my past videos, I've spoken to the fact that I actually gave a presentation at work back in February, and it was about inflation. And really what I focused on in that presentation, I actually did a podcast on it, and on my channel, and I really focused on the increase in money supply, right? When we went through the beer virus back in March 2020, I spoke to the fact that there are obvious consequences to having an unlimited supply of fiat currency and printing it at will based on a stressed economic downturn. And the other thing I would hit on is, if you study the history of money or the study of currency, you do find that at peak points when forms of monetary value or currency, fiat currency, become truly destroyed, it really is the same sort of cycle, and a lot of that cycle revolves around war. And one of the interesting things that I observed back in March in 2020 is President Trump at that time referred to the beer virus as a war. And I really paid very close attention to that use of a word, because the history of money, I think it's the history of money. It's one of the best YouTube video series you could go and study. And it's Mike Malone's The History of Money. Dude does an awesome job of laying things out. And so anyway, what I spoke to, or what I was observing back then and what I spoke to now is, one of the biggest contributors to the rampant inflation that we're seeing is due to the increased supply of currency, which has devalued the dollar. Basic laws of economics: anytime you increase the supply of something, it devalues it, right? So it's the biggest danger with fiat currency is there's no fixed supply. Unlike Bitcoin, we literally just have people in charge that can print it at will. It's like somebody being able to go down in their basement, and I've often joked about this, if an unexpected bill came up, okay? Let's say, for instance, hypothetically, let's say that your air conditioning stopped working, and you were sleeping in 83-degree temperatures. Didn't hit on that, but that did happen. Maybe we'll touch on that later. I think I noted that. Yeah, we'll talk about that. But let's say you had a, $3,500 bill, right? Hypothetically. So you have a $3,500 bill. You don't have the cash to cover it. Well, I mean, Jesus, who cares? I'm just going to go downstairs, I'm going to print some dollars, and I'll pay for it. I mean, that's essentially what the government does when they don't know what else to do, when they have bills to pay or to support others, right? They just print it at will. So there are obviously consequences, and I wouldn't say unintended consequences, because any person with any sense would know that there are consequences to that moving forward. You reap what you sow. You might be good in the short term, but over the long term, things are going to get rough. So what we're starting to see now is we're starting to see the the constant increase this year of reported CPI, Consumer Price Index. For those that paid attention to the podcast I did on CPI, we know that the inflation rate that we feel, what I call the real world inflation rate, is higher than what the CPI is reported as, because the CPI is actually a huge basket of goods, and it is subjectively, not objectively, it is subjectively calculated in many ways using substitution costs, lots of other calculations in there that are very subjective. It's not hard-coded financial figures in there. So one of the things we're looking at now, beyond the rampant inflation that we are seeing, is, we're looking at the stock market. We're seeing the stock market taking a hit. There's an obvious correlation for anyone who looks at the charts between the S&P, the stock market in general. There's a direct correlation between that performance and the performance of cryptocurrencies. And because cryptocurrencies are so naive right now in nature, and they're so small relative to the entire stock market, they're taking a harder hit, right? I mean, there's no hiding it. I don't hide from any statements that I make on Twitter. The length of the correction in crypto and the amount it has corrected by was longer and deeper, respectively, than I anticipated. Now, it doesn't change my perspective in terms of what I feel will happen next in 2020, going into 2023. It's just that it has extended the cycle, in my opinion, and my view, and we'll kind of touch on that. And I've remained steadfast in that. But what this has done is it has instilled fear into the average consumer, rightfully so, and has instilled fear into the market. Those human emotions are reflected in the charts. So the question we need to ask ourselves is, based on the homework that you and I are doing, is a recession, where are we at? Where are we at with a recession, and what's our best educated guess in terms of what's next? So that's what I kind of want to get into. So the first thing I wanted to touch on in this Barron's article, believe this is the correct article. Hopefully it is. Yeah, let me scroll up. Car repos are exploding. That's a bad omen. So oftentimes what you can do is you can look into certain signs which are leading indicators that potentially a bigger recession is around the corner, right? So you could have looked at the mortgage market in 2007 and seen what was going on as warning signs of a bigger economic collapse in 2008, right? I was too young at the time. My age then is how I feel now, but I'm not that young anymore. But I was too young and uneducated in the market. I was still a little actuarial student going through my exams to not pay attention to what was going on. I didn't know what was going on. But there were signs. Like if you basically watch documentaries on that, you'll see that there were signs leading up to that in the mortgage market. Well, there are signs right now in the car market that people were essentially over leveraging themselves. Sorry to use that terminology. I know in the crypto market right now, saying you're over leveraged is a very it's a very sensitive subject, given all the Chapter 11s and insolvencies that have taken place with greedy crypto, unfortunately, financial institutions. But there was over leveraging taking place by the average consumer. So let's kind of dig down here to kind of dig into this a little bit more. So what this article kind of gets into is the fact that there's a car dealer out there that has noticed there's been an uptick in repossessions. That's what repo means, repossession of cars, because people have been unable to pay the car payment that supports the loan for the car, right? So the car's been repossessed. So there's a common trait here. Most of the loans on recently repossessed cars originated in 2020 and 2021. Keep in mind when the beer virus hit and the government was just sending money out of a helicopter to everyone. whereas origination dates are normally scattered because people fall on hard times at different times, right? So it makes sense that if you have a healthy economy and things are operating at an average rate, right? Things are pretty healthy. People kind of fall on hard times at different points. People might lose their job. People might have an unexpected life event and they fall on hard times, and so maybe they can't afford. They made a bad financial decision. We all make mistakes in life, okay? But what this is saying is there's a commonality among the large repossessions that took place in 2020 and 21. So let's take a look here. Let's read here. Those monthly incomes fell, sometimes by half, as pandemic stimulus programs stopped, and now they look even worse on an inflation-adjusted basis, and as the prices of basics in particular are climbing. So essentially, let me put this in layman's terms for you. Basically, people may have had more income than they were. Basically, the government was printing out money and leaving others feel confident that they would get bailed out. Right? And they had money kind of coming into the door, even though they didn't have a good sort of underlying fundamental career backing that could financial income that could support that. Right? They were getting some money from the government. So when that ceased, and maybe some people are losing their jobs, getting laid off, because we are starting to see the signs of a turnaround in the economy in terms of a harder job market, perhaps. Unemployment may be ticking up a bit in certain sectors. People also aren't getting free money, and one of the biggest drivers is that, and I'm even feeling it, and I'm not saying this to gloat, okay, but I work in a niche field, as you may know if you're subscribed to the field. I mean, I work as an actuary. Actuaries, you can look it up. I mean, actuaries do very well for themselves. I'm an FSA. I've been in the field for years. So my income level is high relative to the average American. And so the reason I say that is because if my income is high relative to the average American, and I am beginning to feel inflation. Okay, we just took a road trip and I saw gas prices, okay, as one example. Grocery store, really starting to feel it. What the hell is going on with the price of eggs? Why are eggs this expensive? What is going on? Cauliflower pizza crust. I thought I paid like $5 for that. It's like $9 now. Okay, so if I'm noticing it, and you're listening to this podcast and you're one of the you're a representative of the average American in middle class, which is middle class is a very broad range, but let's just say you're in the middle of middle class, you're really feeling it. And shit, if you're married and you got 2 or 3 kids and you're basically living paycheck to paycheck and you bring in whatever you bring in, you're living paycheck to paycheck, you are absolutely feeling it. So what happened was, what this is suggesting is in 2020 and 21, people became a little aggressive with what they spent on a material object, a car, right? And now, because of the way the economy has turned, there's no free checks, and inflation has begun to really uptick. People are feeling it. People are feeling it, and they can't afford that car payment anymore. They can't live in a 2-bedroom apartment or 3-bedroom apartment and afford a BMW or a Mercedes. Maybe that was a mistake. Maybe you should have gotten like a Honda Accord, So that's essentially what's going on right now. The other thing I wanted to touch on related to this, let's look at personal credit card debt levels, okay? Because to me, this is another indicator that if you think about it, I am fortunate enough, based on how I spend my finances, how I manage my finances. I have my parents to thank for this, especially my father, who very disciplined individual. I learned a lot from him, and so I'm very thankful that I'm very conservative in nature for the most part. So I'm in crypto, so I can't be that conservative, right? So I'm very conservative for the most part, and I work hard. I work very hard, like I'm sure everyone here does. And I feel like I bring in what I deserve and I spend what I should be spending. So every time that credit card comes in, boom, payment paid off in full. Boom, payment paid off in full. There's no other way for me. I do not allow interest to accrue on credit card debt because it is extremely high. It's the worst thing you can do. So if credit card debt, and the average American does have credit card debt, but one of the important things to take a look at, and this should be intuitive, this should make sense. If you appreciate the content, by the way, click the thumbs up button, drop a comment. Hey, I see I have 10 people in now, so thank you for everyone who has joined recently. Drop a comment and let me know what drink. I got a Brooklyn going on. If you don't know what a Brooklyn is, it is whiskey. It is, what did I say? It's dry vermouth, and it is maraschino liqueur and amaretto liqueur. It's very, very tasty. So anyway, thank you for everybody tuning in. Please drop a comment. Let me know what you're drinking. No one has shared what they're drinking. For the love of God, is no one drinking? This is a happy hour. Welcome into the happy hour midweek. Happy hump day. I hate that expression. But it should make sense intuitively that one of the other things you want to look for in terms of a stressed economic environment is if people are taking on more debt that they can afford. Okay? Human behavior is very interesting. Even during a tightened economic situation where inflation is running rampant and things are getting more expensive, there's a lag in recognition by most people, right? People have spending behaviors, and so they could start to rack up debt before they know it, and they just can't afford it anymore. The other thing I'd add to that is maybe they are responsible. Maybe they're very responsible people, but guess what? Based on the rate of inflation being higher than their wage growth, okay, they're not literally able to afford everything month to month. So they're increasing credit card debt. They're not able to do the ideal thing and pay off their credit cards in full at the end of the month. They have to carry a balance moving forward. So this is one of the things you want to look for in a stressed economy, okay? So if we dig down here, let's look at some charts. You know how much I love charts, right? This is what I do at work, and this is what I do here. And maybe someday I'll be doing this more here. That's conversation for another day. This is total outstanding credit card balances from 1999 to the present. Let's follow this in 1999. So we can see we dip down here. It looks like in... why is that lagged? Oh, this is 22. Okay, sorry, I was reading that wrong. This looks like it is 20... 21, 20. Okay, so this only goes up to the first quarter of 22. That makes sense. Okay, never mind. So you can see we dipped down here. Look at the trend here. We peaked in 2008. Okay, makes sense. Okay, as we were going through a really stressed economic situation, and then we seriously came down. Debt started to get paid off as the economy started to recover. Okay, if the economy is recovering and asset prices in investments are coming up, and what did I want to say? Sorry. Layoffs, okay? The job market's getting better, okay? People are employed and they have full-time work and they're like, I need a job. You know, it's a tough job market. So as this is coming down, the economy's improving, jobs are easier to find, okay? Assets are appreciating in value and investments. People can pay down debt, okay? We kind of bottom here in 2013. Look what starts to happen. We start to uptick here going into 2019. Voice change. Sorry about that. A little bit of a voice change. And then we drop off here going into 2020. Look what has happened at around the time of the beer virus, okay? Right around after that point, going into 2021, credit card debt has begun to uptick, okay? And I think, yeah, this is total outstanding credit card debt right here, 2008 to present, so this gives you a better level of appreciation, zoomed in a little bit more on a higher time frame. But one of the other things I am personally watching, I am watching this uptick here. You can see this is a small downtick, but this is only one quarter. We are seeing a very stressed economic situation right here in 2022, okay? There's been rampant inflation, okay? What typically happens if the stock market is suffering, okay, people are getting rid of cars they can't afford anymore because of increased prices. Okay, we have inflation upticking here, and we're seeing repossessions increasing. People can't afford monthly what they're able to afford. Credit card debt is upticking. Guess what also happens with organizations? Companies are also stressed financially, so now you have organizations leading to increased layoffs. That's the next thing to watch, is you want to watch unemployment rates as well. Oil, I don't need to tell you about oil. I don't want to go into too much detail here, but essentially, hey, there can be only one. Harmony One's up 11.5%. That's good to see. There is a very high correlation, a very high positive correlation between the crude oil index and gas prices. This contributes to the majority, not all, but all, and I'm not an oil expert, but I know it contributes to the majority of the prices you see at the pump. And there's a little bit of lag in terms of recognition what you'll see at the pump. So you can see we've been decreasing, but we've been in a general uptrend since 2022. Look at the uptrend here in, I could just draw this. Look at the uptrend here in gas prices since the beginning, since really the end of 2021. You and I are feeling that at the gas pump. Okay, so that's another driver behind inflation. And I think the last thing I wanted to hit on here were mortgage rates. Okay, so because the government, and I have not hit on this yet, because the government has been, because the Federal Reserve, okay, printed literally historically the most money in such a short time period that it ever has and increased the money supply, that increases the likelihood of inflation, and that's what we're seeing. So what the government is now, what the Federal Reserve is now doing is they're increasing interest rates. Increasing interest rates puts pressure on the money supply, okay? It puts pressure on lending institutions. It puts pressure on asset prices, okay? And it helps to suppress the amount of money that's actually entering the system, okay? So what we're seeing now is interest rates upticking, and one of the things you can follow to understand if it's a good time to be a home purchaser, you want to take a look at mortgage rates, your 30-year mortgage rates, but they typically follow. They're higher, but they follow in lockstep. You can see the two trends here, the 30-year fixed mortgage rate and the 10-year treasury yield. They follow that treasury yield. So the treasury yield, you can see since mid-2021, it's been increasing, and so have mortgage rates. If you were lucky enough, if you were fortunate enough, smart enough, and had enough financial income to buy a house, and I am thinking of one smart individual in particular, in 2021, in early 2021, God bless you, because that was an awesome time to get into the housing market because you're locked in at a very low interest rate. Mortgage rates right now, let's take a quick look, and then we're going to get back into crypto and relate all this stuff. We are relating all this stuff for crypto for all those who have stayed tuned in. I appreciate it. Mortgage rates right now, look at this, 5.62%. There were people that were locked in the 2% range. Okay, so mortgage rates have in some cases more than doubled. It's more expensive to go out and get a mortgage rate. What's that going to do to the home market? I'm not an expert on the housing market, but intuitively it makes sense that if interest rates are starting to increase, okay, it puts more pressure on sellers to lower their price because the buyers are looking at the market and saying, look, if I need to take out a loan for $400,000, I'm going to put 20% down. I'm going to put, let's say, $80,000 down, and really the loan is $320,000, okay, minus any other expenses to hit the loan. I'm going to be paying 5.62% on that loan. It's a high interest rate relative to what it was 6 months ago, okay? So it puts pressure on sellers to bring the purchase price down, okay? So over time, so long as interest rates continue to increase, it should turn it less into a seller's market and more, it should turn it into an opportunity where it's harder for the sellers to get as much as they could otherwise get for the market, in the market for their home, and it could turn into an opportunity for buyers, even though the interest rate is higher, to get it at a purchase price that is much lower. So there's really a dynamic shift taking place within the mortgage market as well as the housing market that it'll be really interesting to see how it plays out in the next year. And it's going to vary geographically. I mean, Florida's been one of the hottest markets, but it's going to be really interesting to see how the increase in interest rates puts pressure on sellers to bring the rates down because the buyers are not going to be bidding as much over a home purchase price that has such a high interest rate. Okay, unless someone's paying in cash, which is not most people, it's going to put a lot of pressure to bring the purchase price down for the seller. So, man, managing two laptops can be a challenging thing. So let's see what we got here. Yeah, I agree, Kayleen. You only need one Brooklyn. This is the only Brooklyn I have. I'm a little sad that I'm almost out, but that is the only one I need. Not feeling myself yet, unlike the Crypto Bull Goddess when we went to Chop House 47. She was really feeling herself after that Brooklyn, let me tell you that much. I think at one point she came back from the restroom. I don't even know what happened. She came back from the restroom and she went, "Woo!" And it was just out of nowhere. I didn't really know what happened. And yeah, she was feeling herself after that one Brooklyn. So the one Brooklyn will be good for me. So everybody, before we kind of relate all this to crypto, and we're going into about, I don't know, 41 minutes into the happy hour. So if you haven't already, literally no one has shared what they are drinking. For the love of God, for the 6 people that are listening, will you share? This is a happy hour. You could be drinking water. It's all good. It's all good. Share what you're drinking. So drop a comment, hit the like button, and subscribe to the channel. So is anyone out there a fan of Stranger Things? I am a huge fan. I'm a huge fan of the 80s, and they really are doing a great job representing the 80s. There's so much nostalgia in there. There was an episode we were just watching the other day. It was towards the end of season 3, where they were in the supermarket. It's just crazy, the attention to detail and all the cereal boxes going through. And they had like the Ghostbuster cereal, and they had some of the older logos for some of the cereals like Cocoa Puffs. Even the flashlights. The girl who went through the vents and she had flashlights on her headpiece. I had a flashlight that looked just like that silver one. My grandparents actually did. And there's just so much attention to detail to Stranger Things. If you have not checked out Stranger Things, you need to. I was, I was actually current. I've been watching it every season that it came out. And I was on season 4. And then I found out that the Crypto Bull Goddess had not been watching this show. And that was a big surprise to me. So we actually started the television series all over again from season 1 all the way up around the date that I moved. Actually, season 1 all the way up until now. We're on season 4, thankfully. So I'm kind of sort of current, or we're sort of current. But I enjoyed rewatching it. If you have not watched Stranger Things, you have to check out Stranger Things. Kevin, thank you for the Maker's Mark on the rocks. Nice, my friend. Hey, cheers. I like doing I like drinks on the rocks. I typically will do actually I like gin. I enjoy gin. Typically I'll do it with a splash of lime, like gin with a splash of lime. Whiskey, bourbon, all that stuff. Straight or neat. Or on the rocks I'm good with. Other drinks on the rocks I'll do tequila. I like tequila. I went to a good tequila tasting place I think I mentioned on the podcast a way back on Annaba Island. I don't remember the name. Somewhere near Jacksonville, north of Jacksonville. I forget the name of it. Anna Marie Island. Went to a tequila bar there. It was really good. Did a flight of tequila. That was really good. So, yeah, thanks for sharing what you're drinking. So you haven't watched the last 4 episodes yet either. Yeah, we just started season 4. So for all those... I'm not sure where everybody's at with Stranger Things. By the way, if you're not watching Stranger Things, you're missing out. Like, you're totally missing out. But they do such a great job, like I said, giving homage to the 80s. So one of the things that I have the capability of doing is, I'm up here in northern Florida right now. It's really nice to be able to kind of take your job with you, right? So this for me is a lot of fun. This is not work for me. I definitely put in work before doing something like this, but this to me doesn't feel like work. I enjoy producing content for the fun of it and helping to educate others. But, I can take my job with me. And so right now I am not in southern Florida. In fact, I've been away from southern Florida for 3 weeks at this point. So, I'm in northern Florida, and this beautiful background here. By the way, the ceiling fan is like a wind tunnel. It was helpful. It was helpful because I'm going to continue to digress. We were without AC for 2 days. 2 days. It's the middle of summer. It was 83 degrees in this room. My skin was plastered to the bed. It was pretty disgusting. So this fan did help. We had 2 fans in here at one point and a sound maker. Literally sounded like we were on board a train. But, it helped out. Did cool off the room. I don't understand. Now, I do want you to explain to me what I don't understand here. If it's 83 degrees and your air conditioning's out and it's the middle of July, which is what happened, why, for the love of God, would you take a huge, like, wool, heavy blanket and wrap it around you? Does that make any sense? Unless if you literally have no blood circulation and are cold and dying, that makes no sense whatsoever. But the crypto bull goddess, in 83-degree temperature, slept with a heavy blanket. I don't understand it. There's sheets on the bed. There's sheets. You could sleep with a sheet. It's 83 degrees. Sleep. I get it. Fun fact. It's hard for me to sleep unless I have a sheet over me. I need something over me. She's the same way. But why, for the love of God, would you sleep with a wool blanket? It makes no sense. I don't know. So anyway, I don't even know where I was going with that. But one of the things was, I can take my job with me anywhere. And right now I'm in northern Florida. I'm in the Crypto Bull Goddess's house. And there's a dog. There's a dog. Not here. 2 homes down. This is a townhome. 2 homes down. The owner must leave the dog in a cage all day. And the dog barks all day. We work all day. We hear the barking all day. So I think we're going to need to give that neighbor a visit and just be very friendly and say, hey, I'm not sure if you're aware, but your dog barks all fucking day and I can't fucking concentrate. So, that's been going on. That's been a load of fun. But all humor aside, before we get back into crypto, one of the things I wanted to mention real quick is just because there's been so much stuff going on. This year has been very challenging in many ways. But there's been a lot of health-related things that have come up. I know I shared with you guys health-related things came up with me very unexpectedly. It was a pretty scary situation. And there are some health-related things that have come up with a family member on the Crypto Bull Goddess's side. And, we're going to have to take an unexpected trip. Going to be gone. Hopefully I can do the Bitcoin Crypto Happy Hour next week. But it's like one thing after another keeps coming up, right? So one of the things I just wanted to share with you real quick before we relate everything that's going on in the recession to the crypto markets, and we're going to take a look at some charts here, and then I'm going to take some TA Q&A afterwards, is just a reminder, it's something you really appreciate the older that you get, especially because the older you get, not only should it make you wiser to things, but certain life events occur just by nature the older you get. People who you're friends with, people who are your family members, they get older, and things happen, So one of the things I wanted to encourage everyone to do is relationships can be very sticky, whether it's a relationship with your significant other or a family member or a friend, even a best friend. They can be very sticky, and I would just encourage everyone to really take a step back and realize we're all human. We all make mistakes. And to really just try to spend time with people that you really care about, because before you know it, something can happen, and you may never see that person again. And I'm not trying to be dramatic, or I'm not trying to be morbid here, but just make sure that you really love and appreciate everybody who's close to you in your life. Things really happen. So with that being said, what I wanted to do is I wanted to bring everything back to the conversation that I was talking about with the recession. Okay, all these key points that I was hitting on and how everybody's feeling it. I want to bring it back to the crypto market, and I want to give you my honest opinion, as I always do, in terms of what I see in the charts and what I feel like will likely, in my opinion, happen next. Again, there is a probability for everything. I'm not here to tell you what's going to happen. I don't know what's going to happen. Literally no one knows what's going to happen. The world could blow up tomorrow, all right? But nobody knows. So all we do is we make probabilities. Why did I do that? Maybe it's the Brooklyn. I don't know what's going on. We make probabilistic statements on this channel. We do not make statements of assertion or certainty, because that would be disingenuous. As quirky as I might be, and as out there as I might be at times, I am a very logical person and try to provide probabilistic statements with things, and I'm also extremely genuine with everyone. So, with that being said, let's get into some charts here. So, looks like I missed a comment. Fernandina Beach, Florida. Oh, was that related to the comment on the... Okay, so you must have been in a tequila tasting bar at Fernandina Beach. Okay, cool. Well, I hope you enjoyed that tequila tasting bar, because I know the one at Santa Ana, Miranda, Banana Fana. Maybe it was... Oh, maybe it was Fernandina Beach. You were at... Okay, maybe you were at a tequila tasting bar too. At the same tequila tasting bar I was at. Okay, so let's get into a few charts here. So this is Bitcoin, and what I'm going to do is I'm going to go into a few charts here, and I'm going to share with you honestly what I see, and then I'm going to share with you what to look for in some of these charts, and then also I'm going to lend evidence to the fact of why I feel convicted on the major thesis that I currently have concerning what we will see moving forward. This is the Bitcoin daily chart, it looks like. I thought this was a 12-hour chart, but let's see. Was this intended to be a 12-hour chart? Let's go to the 12-hour chart first. Now, for those who look at a 12-hour chart, it's hopefully I've lent credence to that chart. There's a lot of historical significance in the 12-hour chart. Go to my channel and check out the videos that I've put out on the 12-hour chart. One of the challenging things that I've indicated to everyone is, as a technical analyst, what we're trying to do is we're trying to evaluate past data and current data to formulate probabilistic statements of what we think is most likely and least likely. Okay, and one of the challenging things with Bitcoin and crypto in particular is that the time range, okay, is not significant. It's not like the S&P or the Dow Jones. We can't go back 50, 60, 70 years. We can't. We can go back like 11 and a half years for Bitcoin. We can go back for like 2 years for each bar. So there's not a lot of data in terms of a time horizon. So we have to try to come up with the most credible views we can to draw the best conclusions that we can. And anytime, typically, when you zoom out on a chart and there's more time frame in a candlestick, it lends itself to a more credible picture. In this case, because there's limited data on Bitcoin, one of the things I did is I looked at a lower time frame, a 12-hour chart. It's just a day cut in half. And I drew all sorts of conclusions, and there's a very technical, thorough video that's out there and a follow-up video you can check out on my channel. But anyway, I'm going to make this super, super simple. The first thing that I'm looking at here is there is a little bit of bullish divergence on the RSI, which is good to see. You can see the RSI is increasing, and in particular, let's come up here. In particular, you can see when we came down to this low here, the RSI was here. When we came down to the same low here, okay, we're higher here. So there is a little bit of bullish divergence going on, which is good to see. Doesn't mean that we're going to see a break to the upside. It just lends itself to a higher probability that we could see a break to the upside. Notice the word choices that I'm using. The other thing I'm looking at here is that this is a little bit of an ascending triangle, what I'm seeing personally. You can see there's an upward sloping line. Now notice this wick here, you do not need to draw this like this. Okay, as long as you're not drawing through candle bodies, you do not need to draw something that starts from the wick down here up to the wick here. You don't have to, because this was an extremely volatile wick in my opinion. So what you can do, as long as you're not drawing through candle bodies, you could start it, say, there. Okay, you can draw it up right there. Okay, so we got touch, 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 touch. And then we sort of have this range going on right along here, right? So we essentially have price coming up, wall, higher lows, wall. We want to see a break, retest, and move up. That's essentially what we'd want to see. But the key thing to look for on the 12-hour chart, I would zoom in on a smaller time frame as a leading indicator that there could be a potential bullish reversal on the more macro time frames. I've hit on this time and time again. You want to use sort of smaller time frames to see when things are turning around. That will eventually, as long as it continues bullish on the smaller time frames, it will bleed over into the higher time frames. I do plan to put out a video with 4 Quattro to 5 Cinco. That Brooklyn's hitting in. Brooklyn has hit me. I do plan to put out a video with 4 to 5 steps in terms of what you should look for, what I'm personally looking for that I think you should look for signs of a true reversal into the crypto market, Bitcoin essentially, in the Bitcoin chart, because the Bitcoin is what? The driver of value. So as Bitcoin turns around, the rest of the market's going to turn around. So I will put that out at some point. But anyway, what you want to look for in the 12-hour chart, it's very simple. I'm going to keep it stupid simple. Look for price to get above the 50 simple moving average, which is the purple line. Then we want to get above the 200 simple moving average. Step 2 is for the 50. Excuse me. After that happens, step 2 is for the 50 to cross above the 200 and get a golden cross. And you want the 200, this is important, you don't want the 200 going like this. You want the 200 to flatten out and start to increase. So we need price to push up above the 50, push up above the 200, and then have the, this is a lot of lines, and then have the 50 cross above the 200 and have the 200 cross up. That's what you want to look at on the 12-hour chart. By the way, feel free, as I'm going through the charts here and building the case for why I think that we are still in a, even though bearish price action for sure, we're not in a true bear market. And I know that's crazy to say, I know. But we're literally in a massive correction, but we're not in a bear market. As I build the case here, feel free to drop a comment here with any charts you want me to take a look at, because immediately after this, I am going to do a TA Q&A. So any charts you want me to look at, crypto related, I'll pull it up, we'll take a look at it, I'll chart it, and we'll go from there. Anything on the spot. This is Bitcoin on the daily. I think what I wanted to show here once again was I wanted to show, I can use the brush, I wanted to show the bullish divergence. So basically the RSI is increasing, you can see that, and then price, price has been basically around the same level, but the RSI has been increasing, right? So there's some bullish divergence there. But the other thing, I thought I had this chart up. Sorry about that. Let me see here. The other thing I wanted to do is I want to take a step back, and I want to look at this weekly. The other thing I want to stress to you guys is, and I've tweeted about this plenty of times, I'm not here to pick a bottom. And I did tweet out earlier today that I feel more convicted than I did 6 days ago that the bottom is in. Okay, and I'll explain why. But I'm not here to pick an exact bottom. What I am here to do, amongst other things, is to share with you, in my opinion, while it's never financial advice, when it is an opportune time to be buying into the market for a longer term horizon. It's just a generational buy. The RSI is at historic lows. I mean, we have not been this low since 2018, okay? And we are below the 200 simple moving average. Now, the good news on the weekly is what you like to see. This is consolidation here. Look, I was here, okay? I was here in 2019 when people said, I want to show you this. People said this was a bear flag. Okay, I was here. And I remember, okay, bear flag, right? We had this huge drop, okay? We had a huge drop. Let's zoom in here. You can appreciate it more when we get rid of the data to the right. And basically we had a descending channel here, right? And we already had a massive drop here. And people were like, oh my God, we're getting a massive bear flag and we're going to bleed down to like, a sub $1,000. This is what people were saying. And actually, when you drew the technical target on the bear flag, it made absolutely no sense because it took us into negative territory. So it didn't even make any sense. I'll tell you what I saw. And there were a few other people who saw this as well. Let me share with you what I saw. I saw an ascending triangle. So back in 2018 and 19, what I saw and what I felt from the market was, and the other thing I should add is, there was extreme pessimism. And I've hit on this before in other videos, but when we were in this area here, I remember Tom Lee in particular, I saw a descending triangle, which did end up playing out. Okay, this is one of the times a chart pattern showed up, and it played out. It doesn't have to, but it played out. Tom Lee was saying, oh, we're hitting 58 to 6,200, and this is like strong support. No, guess what, Tom Lee? Every time we continue to hit support, it weakens. It's like a hammer banging on the floor, and eventually it's going to break. Just like with resistance, if we're pushing up. This is the ultimate warrior. My little warriors. If there is resistance, okay, and we keep hitting it, it's like a hammer hitting a ceiling, and it's going to cave in eventually, right? So I saw a descending triangle. The support was weakening every time we hit it, and guess what? We broke down. Now, let me tell you what happened then. Guess what happened? People, the average person that went on TV and the average person on Twitter, they were bullish in here saying 6,000 was support. Once it broke down, okay, guess how everyone turned? Bearish. Everyone was bearish. We broke down here and everyone was saying we were going down. I remember Hyperwave. We're going down to like sub 1,000, all right? Well, I mean, I personally feel like things have gotten so pessimistic. Everyone is saying we're going to 10,000 or lower. 13,000 is inevitable. 10,000, 8,000. Technical targets. Blah, 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 blah. People that don't know TA are talking TA, all right? What I see formulating here is potentially, I'm not telling you this is what's going on, but potentially something similar, okay? This is a 3-day view. Maybe let's do a 2-day view here. Similar to the 12-hour view, at the moment, what I see is sort of a ceiling in here, okay? And you may even draw it from down here. Time frames change how the candlesticks were sort of laid out here, because that was sort of our big drop back there. But at the moment, okay, at the moment, I'm not saying it has to continue this way, but at the moment there is a roof and there's an ascending level of support. So it would be interesting to see if this correction plays out similarly, that we begin to see price coil up here before we break out and begin to move higher. And one of the things I do want to reiterate for all those listening to this happy hour on replay, and for all those that tuned in, before we get into some charts, it is a rough market out there. It is a rough market. And as a content creator, I can tell you, it is very hard to put out content during bearish price action like this, because there is such little engagement. Twitter is like a freaking ghost town at this point. Views, the most people that I had watching this live stream were 11 people. Not a lot of people. It's really challenging out there. And so the reason I bring this up is because I want to express appreciation. I want to express appreciation for the people that do tune in, the people that do engage with me, because it's tough putting out content right now. It's going to be a lot different when things get exciting and I talk about going live. Maybe, 10 live people watching will go to 20 or maybe 30 or 40. But right now, it is a freaking ghost town. So I just want to express appreciation for everyone tuning in. Let's look at a few more charts, and then we're going to open it up to Q&A, and hopefully there's at least one question with the 3 people tuning in. So one of the other things I'm looking at to making me feel more confident that the market is not in a true bear market, and we're just going to go sideways for the next year, and it's just going to be a shit show. Let's look at Ethereum dominance relative to Bitcoin. So what you should see in a traditional true bear market for the cryptocurrency market is you should see altcoins not only plummet in value like they have done, but you should see that the relative strength to Bitcoin really drop off. I mean, think about this for a second intuitively. If we're in a true bear market and things are just going to go sideways for the next year, okay, because they've already been going sideways. If they're going to go sideways again, for another year, assets that are more volatile like altcoins are going to sell off a hell of a lot harder relative to Bitcoin, such that the relationship between those prices will really drop off for the altcoins. There will be so much weakness, they'll create new lows, they'll bottom off in territories they haven't been at in 3 or 4 or 5 years for those that have been around for a while. That is not what we're seeing. Look at Ethereum. Let's delete this for a second so that I can be crystal clear on this. Ethereum's been around for a little while, right? This was our top right here in the last cycle in 2018, okay? What preceded that top? A huge drop-off in Ethereum dominance, right? Ethereum expressed a monumental amount of weakness relative to Bitcoin, and it hit lows down here, okay, at levels that hadn't been seen, and this was the strongest altcoin, at levels that hadn't been seen, since 2016, beginning of 2017. What has happened this year? Let's look at Ethereum. Well, since we corrected, okay, this was up here at the peak at the end of 2021. What has happened? Let's just keep things real for a moment. It's important to look at the USD value, but it's important to think outside of the box and look at something like this and look at the strength or weakness relative to Bitcoin. Well, since this moment when we topped, we've decreased and consolidated in a key support region in here, okay? We have not done this, okay? We haven't done anything remotely similar. Let's look at some of the other altcoins. So I'm looking at a lot of these relativities, and what I'm seeing a huge move up. This is one BTC, and I'm seeing a drop off, but I'm seeing a higher low relative to here. And I'm seeing price consolidation in an area that represents massive support. So we have not dropped off here and continued to bleed down. H-bar, it's the same story, okay? We had a massive run up. What have we done? We've kind of trickled down here, but we've regained support. Let's see what's next, okay? Let's see what's next. What I'd like to see for something like this, higher highs and higher lows, and let's retest those highs, and let's go higher. This has not bled off down here into lows we haven't seen since the beginning of 2021. Let's look at, this is probably the best chart we could look at, to be honest. For the Holy Crypto Trinity, Mana has been the best producer, okay? This chart has continued to skyrocket and consolidate. I don't need to draw anything on this chart. You can see what's going on here, all right? We have not dropped off. I don't need to go through any more of these relativity. Let's look at Ethereum Classic, actually, okay? Again, I'm not here to debate fundamentally the project. I'm showing you the chart. Now, you could argue, actually, there's a descending triangle going on here at the moment. You could say, well, this is a descending triangle. I won't argue that that could be going on. But at the moment, we have consolidated. What have we done? We've consolidated in this blue region here. We've maintained higher highs. Okay, excuse me, higher lows. So the relativity charts are telling me that the strength expressed in altcoins is higher than it would otherwise be in a bear market. Okay? To me, this tells me, as brutal as things have been, I've told you guys, I went from Lambos to Geo Metros. Okay? My account on paper, if I think about it too much, it might make me cry. No, humor aside, my portfolio has corrected substantially. But what I realize is that charts like this are telling me, as brutal as it's been a correction and not a true bear market. Let's take a look at a few other charts. This is the total market cap. I tweeted about this. Look at the ascending line, okay? And zoom out. What have we actually done here? We came out and peaked up here, and we've corrected, and we're around the prior all-time high. Guys, if you've been following, guys and girls, if you've been following me for a while, coming up and retesting a prior all-time high as support and moving higher is so mega bullish. I know it's been painful, but you sometimes just have to zoom out and look at a macro perspective to give you vision and to see what's going on. It's the same story on the total too. What is unhealthy about this? Zoom out! Look at the chart! Dear God, people. Remind yourselves, it's rough. I know. I'm with you. I get you. Again, Lambos to Geo Metros. All right? You came up. Massive correction. Came up. This was a decent run here. But we've since been chopping around. We're waiting for a move higher. This is retested the prior all-time high. It's the same thing. Look, prior all-time high. We've retested. We've formed support. Now, what I don't want to see is us falling down. I don't want to see us falling from 485 billion in market cap in the total to. So this is, and let me take a step back for a second for people not familiar. This is the total market cap excluding Bitcoin. So it's everything. It's all the altcoins. So what I don't want to see is, now we've formed a base here at the all-time high. I don't want to see this begin to trickle down. That would be bad, trickling down into the $200,000 or $300,000, $200 or $300 billion, $200 or $300 billion range. This is the other. So this is excluding Bitcoin and Ethereum. These are all the altcoins excluding those. Again, we haven't even touched the prior all-time high. Look at this. 2018, we haven't even touched this level. Okay? What is bearish about this? Look. And we've done a little consolidation. Ladies and gentlemen, little consolidation. Okay? Now, one other chart, DXY, and then let me talk about specifically today the CPI report and why the CPI report. Why is this thing up 115%? Dear God, PRQ. Okay. You're going to get pumps like that all the time in small market caps. Let me also relate this to the report today and the reaction from the market, why I feel more solidified that the market has bottomed. This is the DXY. Now, one of the things I pointed out, the more that the chart evolves, again, this is what we do as a technical analyst. As the price data evolves, our analysis evolves, our conclusions and probabilistic statements evolve. Okay, that's just the nature of being a data scientist or mathematician. Okay, and reading a chart. This is a W pattern. Okay, I have not tracked or been super familiar with W patterns. So I had to do a little bit of homework on a W pattern, but you can see there's a rounding bottom, right? Rounding bottom, and there's sort of this W shape, right? And I took a measured move. There's no science behind the measured move. It's just from approximately here to here, okay? To the green line. And that puts us at around 113. I want to remind everyone, for everyone who's super salty over the correction, you don't think I'm salty? I'm salty. Believe me, I'm salty over the level that my portfolio has corrected, just like everybody else. But do you know what leaves me feeling convicted? It's charts like this, and let me explain why. This thing can continue going up. Look, the dollar can continue to go up all at once. It's on a trajectory that is a parabolic movement. It's in a parabola. When a parabola ends, let me remind you when a parabola ends. This, okay, this is Bitcoin. And this is Bitcoin in a weekly chart. Ladies and gentlemen, this is a parabola. We went up to $20,000 and came down to 3. Okay, that's a parabola, and that's what happens when a parabola ends. A massive correction. The dollar is on a massive historical parabola with a technical pattern. If this W formation, if I'm accurate in drawing this, which I believe I am, the technical target is around 113. We could hit 113. Hell, we could go to 115. When this thing corrects, it's going to correct hard. It will correct hard. History says so, because when things enter parabolic price movements, they also correct very hard. Think about what I've said about levels of support and resistance. There are virtually not a lot of levels of support being built in this area here. It's just going straight up. So when it comes down, it's going to come down hard. What have I said on this channel? What have I said on Twitter? When the dollar goes down, crypto goes up. When the dollar goes up, crypto goes down. They have an inverse relationship. So one of the most important charts that you can be looking at is the dollar index chart. It's the DXY. Keep an eye on it. I'm watching this thing, and basically my attitude is, yeah, you're having a great time. You're running up dollar. You're very strong relative to all the other currencies out there. All these price price indicators. The RSI is a little overheated. The MACD cross, the stochastic RSI, is nearly at 100. It's been there for a while. It's just a matter of time and remaining patient to see this thing correct and come down and for crypto to reappreciate. Now, I came on Twitter, and the last thing I want to say, and then I'm going to turn it over to any TA questions, okay? And I see there might be one under there. Great. I have a TA Q&A question. This is great. Thank you. Drop your questions, please. Like the channel, subscribe, and I have to go down and start making dinner at some point. So we got to wrap things up. I promised the crypto bull goddess. She made me my Brooklyn. I got to make dinner, but I make dinner every night. You know, I'm a good guy like that. You know, pretty lucky. So one of the things I tweeted out. So I pinned here something that I said I would pin on July 7th. I said most people seem to think we'll get a dead cat bounce preceded by lower lows towards 10,000. I strongly disagree. Given market sentiment and historical significance behind just how low we are, I am leaning towards the bottom being in. So at this point, what I did was I said to myself, dear God, there's so much pessimism in the market. Everyone is convicted based on prices have just gone lower than myself. Many I respect think. Now they've just gotten emotional. They've gotten emotional and they said, well, I mean, we're going to be going to 8,000, 10,000, 6,000. Shit, we're going to take out 3,000. People are just getting cray-cray, okay? And what they should be is they shouldn't be cray-cray. They should be a little jelly of the people who interject logic. So at this point, based on the market sentiment, just how pessimistic everyone was, and all the charts that I've shared on the videos on my channel, and all the charts that I've shared on Twitter, if you're not following me on Twitter, follow me at Crypto Bull God. I share charts a lot, and it would be value added for you. Based on all of those charts and based on the market sentiment, I said, more than likely, I actually think we bottomed. I'm taking the contrarian view. And then today, I made a statement, and I said, let me get it. What did I specifically say? That's funny. Your opportunity to buy less than 10,000 Bitcoin was back during the COVID crash. It's not happening. And I also said that I'm feeling more confident today that Bitcoin, that the Bitcoin bottom is in. I can't tell you it's in, but I feel more confident. I'm going to tell you why. And I'll explain more on the happy hour today. So, the additional data point that leaves me feeling confident that the bottom is in is the reaction to the CPI report today. The last time, or every time, for the past several months, that the consumer price index has come in as expected or a little higher, the market has seen a strong sell-off. Let me remind everyone, okay, and this even goes for a channel that I have respect for. I'm not slighting anyone here. I have respect for Data Dash. I watch his channels. I listen to him. I have a lot of respect for the content he puts out. I don't agree with him all the time, but it doesn't mean that I don't respect the content, okay? So I think he does a nice job. That guy does a nice job. I think his name is Nicholas Merton. He does a nice job. Even he was thinking that the CPI, if you watched his most recent video, the premise of a lot of his video is, well, what if the CPI comes in underreported and there's a lot of shorters out there, we could see an explosive move in crypto. A lot of people... I think there's been a lot of people who have sort of been hoping or holding out hope that the CPI would come in lower and we'd start to see a turn there. And what actually happened was the contrary. And let me tell you why I think it was a good thing. It was a good thing that the CPI came in at 9.1%. And the expectation was 8.6. It came in a full 0.5% higher. Why do I think that's a good thing? It's a good thing because of what happened afterwards. There might have been a sell-off initially, but look at my screen right now. Look at how strong the market has rallied. 3% Bitcoin was up over 20,000 today. Harmony 1, 12.5%. HBAR, 5.5%. I don't know why Mana's down. That's been one of the strongest performers. That's an outlier. Quant, 4.5%. Sushi, 9%. Digibyte, 5%. Ethereum, 5%. Okay, all these crypto projects. The point of what I'm saying is, I am starting to get the sense, based on today's reaction to the CPI figure being higher than expected, the positive turnout in cryptocurrency that's about to close out in 53 minutes to close the day, that there is a true shift taking place, that there's a recognition that inflation is higher than expected. The Federal Reserve is going to continue increasing interest rates for some period of time, and the market has digested that and accepted it. My educated view at the moment is that while I still feel like there is a probability and possibility for a true recession to hit this market harder and faster than I anticipated, and that we will see a suppressed crypto market and stock market for a long period of time going into 24 or 2025. That is a real possibility. I do not think that's what's going to happen. My best educated view is that we will see a temporary relief within the stock market and the cryptocurrency market, since they're very correlated. We will see a true blow-off top at some point in 2023. And then that's going to kind of happen, okay? It's going to happen at a period of time when all this underlying stuff is going on. Remember, I was speaking to all the things going on with repossessions of car auto loans, personal debt upticking. That stuff is sort of festering. But as that sort of stuff is sort of pent up and occurring, there will be a relief rally. And not just a relief rally that's a dead cat bounce. We will see a true rally in the cryptocurrency markets that will result in Bitcoin creating a new all-time high in 2023, the rest of the crypto market. We will get a blow-off top in 2023, after which we will see a huge correction, and a true recession in the stock market and the cryptocurrency market at some point in 2023. That is the way I'm leaning. All these things are kind of festering up. Things do not occur when most human beings think they will occur. I was thrown off several months back when all this corrective nature started happening in the market. All the people who are doom and gloom are going to be thrown off. The market, in my opinion, will rally. We will see a true turnaround in the cryptocurrency market and the stock market. That will be short-lived, though, relatively speaking. As everybody starts to get optimistic that things are turning around, I do think that we're going to see a true correction at some point next year. That is my personal view. So again, I think the way that the market has responded to the CPI report today further confirms a lot of the other views that I'm looking at in the charts that I've shared on Twitter and YouTube, that we have not bottomed, that we have bottomed, and that we have not topped, is what I meant to say. And we will see a true top next year, and then a further massive bear market and correction at some point later afterwards. So, with that being said, that is my view of the market. And I want to turn it over to the TA Q&A, and I'm seeing what time it is, and hopefully the Crypto Bull Goddess is not upset because I need to get to dinner. Let's see what we got here. Michael. Okay, so can I take a look at the CRO token and or FTT? I'm not familiar with FTT. I'll have to pull that up. Do I even have the CRO token on here? I think at one point I charted it. I'd be happy to chart it for you. Nope, did not. This is going to be a brand new chart, my friend. Oh, look at that. Paul reached out to me. I have not talked to. He's my mechanic slash friend. I have not heard from him in a little bit. He's probably wondering where I'm at because I've been out of South Florida for 3 weeks. So let's take a look at CRO. This is my blank chart that I created for, and it looks like I actually charted something. That's a good perspective right there, what I had drawn for Bitcoin. Let's take a look at CRO. Great question. What exchange should I look on? Let me see here. I want the one with the most price data. Any recommendations on which exchange to use, Michael? I'm not sure which one you prefer here. Coinbase, I don't think, has a lot of price data. I didn't think so. You know what? Let's look at... I don't see you responding. So let's look at KuCoin. This is a weekly view. Not a lot of price data here. Let's go to a 3-day. Okay. Well, I can see a major area of support that was retested. What do we got for moving averages? Alright, I don't think that's going to be helpful. Let's just look at the price data. I don't want to look at any indicators. Oh, maybe RSI. Nah, no bullish divergence. Let's just look at the price indicator. Ignore the price indicators for now. Now, the first thing I would point out here is we hit a key level of support and bounce, which is really good to see. Look at this guy. Now, again, if you're newer here or you're newer to charts, I want to remind you that, let's take this off because that's distracting. Price wicks are an expression of what? volatility. So we can draw lines through price wicks, so that wouldn't be valid because that's through the candle body. But we can't draw lines of areas of support or resistance through candle bodies. That would be invalid because that's where price closed or opened. We can't draw lines through that. But wicks represent where the price went but then came above or went up and came below. Okay, so it's just representing volatility. That's all it represents. So you can see we have a key area of support here around 10 cents, 9.5. Oh, it looks like 9.5 cents. We almost touched that, and I bet you, depending on what time frames. The other thing, you can switch time frames, and it'll change your perspective. So we can go right about there. We almost touched. Okay. So what I like to see is we respected this 9.5 to 10 cent range. Okay, I do like to see that. Now we also have a few areas of descending resistance we can point out. We have a sharp resistance here. Okay, sharp area of resistance, and then we can draw this secondary area of resistance from that wick to here. So to see a true trend reversal, what we'd want to see, Michael, is we'd want to see price stabilize in this area, get above the resistance, maybe back test it, get above here, and then beginning building prior areas of resistance as support. But let's actually take a look at key areas of resistance that you might want to hone in on. I mean, this is an obvious one. Again, another thing to stress, especially with a volatile asset like this, there's really zones of resistance and support. There's not a, I could draw a line, for instance, right here. Okay, red is resistance. I could draw it right here. Someone might argue with me and say, no, I don't think it's 21.66 cents. I think it's 23 cents. Okay, well, there's a zone, all right? But the point is, you can see there's candle bodies all along here. There's a wick here. So anywhere around 22 to 23 cents, I think, is a major area of resistance you're going to want to watch for. Other areas, it looks like there's another area of resistance right here. So it looks like another area of resistance is around 18 cents. So really, keeping it high level and just focusing on something that's more current and relative to where the price is at now in the shorter term to what to watch for. Watch for price to stabilize in here, okay? Then you want to battle around 18 cents and form support. Battle 22 cents and form support, and then we can have a conversation about moving higher. So that's really what you want to watch for. Thank you for the question. Let's see what else we got here. I'm missing myself a drink. Wish I had another Brooklyn. If I said that I only wanted one Brooklyn, I was lying, I guess. But I'm not a liar. It was a white lie. There's a difference between lying and white lies. What do we got here? Oh, you asked about FTT, actually. I'm actually running over here. I don't know how much more time I can. We gotta cut this. We gotta cut this happy hour soon, so that I can get dinner started. I'm not hangry. I'm just hungry. Wow, this is a beautiful chart. Thank you for pointing this out. This is a great chart. This is FTT USD. Not familiar with charting this one, but it is a hell of a chart. Thank you for pointing this out, Michael. This is great. Love seeing beautiful charts here. So we got a downward sloping line. I draw it right here. Forget the price wick at the top there. I want to draw it right there. You can see I'm drawing it from the candle body here to the wick here to the wick here. See this? Candle body, wicks, wicks. So we got downward resistance we need to break there, Michael. Now the beautiful thing, the reason I'm so excited about this chart beyond being a nerd, because I am, look at the support that it hit. Again, support zones, but the point is it's right around there. Look at that, it's beautiful. 24.6. We're bouncing right off here. Look at this. Bouncing right off. I want to see this hold. You don't want to see this break, okay? So, like many of the other crypto charts, you want to make sure that this level holds. If not, we have to revisit where we could see it bounce, which honestly, a lot of parabolic price movement. Beautiful thing in the short term. Over the long term, if it corrects, we talked about this on a YouTube channel about Bitcoin. It's not great because a lot of areas of support aren't being provided. It's like a tree with no branches. If you fall, you don't have branches to hold on to. So what do I want to see? Now that we've sort of settled in this area, what I want to see first key area of resistance is right around there. You don't have to get too cute with it. I mean, it's right around 34. So you want to see price. Essentially, what you want to watch for, Michael, with this one, you want to see price stabilize in this 24 to 34 area. Break 34. Come up here. Break resistance. Break this downward black descending line of resistance. Maybe back test it as support and then continue moving higher. This is a beautiful chart. Thank you for pointing this out. I've said beautiful chart about 5 times at this point. Beautiful, man. Yeah, beautiful chart. Thanks for the perspective. I owe you a Wawa pork roll. My friend, you can treat me to Wawa, but did you not hear that I don't eat red meat? Pork is red meat. So as much as I appreciate the the pork roll, egg, and cheese, and that would be like a Pennsylvania Dutch thing. I don't do red meat, so but I'll take you up on like a beer or something like that. Yeah, but thank you. Glad to help you out. So let's see. Is there another question? Looks like trash to me. All right, so one more chart that I'm going to take a look at. Thank you, Steady, for the question. If everybody has not and appreciated the content, please drop a like. Hit the thumbs up button. Leave me a comment. Subscribe to the channel. Share it with a few of your buddies. All right, let's see. VRA. I'm not familiar with this one. I like charting stuff I'm not familiar with. This one's not too bad either. See the head turn there? It's like Michael Myers. Going in for the kill. Going in for the chart right now. So, not familiar with this project. Not familiar with this token. So, I love the challenge of charting something like this because, to me, here's the thing. Here's the thing I want to say real quick before I chart this thing out. I am by no means an expert at charting, but I do feel like I'm very good at it, right? So as soon as a chart comes up, I just feel like I automatically, because I've looked at so many charts, look at my eyes, I've looked at so many charts that automatically lines of resistance and support come out. So it's just like a beautiful thing when it's clear cut and I can see it. This one, so to be honest with you, Steady, this one actually has some beautiful market structure to it. And the market structure, like with a lot of these crypto projects, it really does follow Bitcoin. So at the moment, what you see is this expanded flat correction where we have an A, a B, and then a C. So where this top actually goes higher than here, but it's really an ABC correction. So that's currently how this is set up. But let's take a look. So anytime I draw lines that are red, they're resistance. Anytime I draw lines that are green, they are support. This is the last chart we're going to take a look at, but I'd appreciate any other comments. There's only been one person who has shared what drink they're having this evening. I'm a little salty about that. This is a freaking happy hour, so I'm a little salty about that. Oh, that's a perfect touch. Look at this. So I want to explain how I drew this line of support. Look at what I did here. There's no magic to it. Candle body, see the candle body right here? Candle body, that's beautiful. Beautiful support right there. Now, I would actually argue you can draw a zone right in between these two lines, because even though it goes through this candle body here, depending on what time frame it wouldn't go through the candle body, it still touches this candle body, and this wick. So I like this whole zone here, okay? And as you can see, we just about touched here. So what I would look for first off in the short term is there's a sharp, like with many projects. I mean, this thing is really... Actually, we've already broken out from this descending line of resistance. So what I would look for, there's a descending line of resistance right about, I don't know, let's not get too cute. Right like that. So we want to break the descending line of resistance like the other charts we took a look at. The other area of resistance I would look for... Now that we've sort of temporarily at least bottomed out in this range, hopefully it's permanent. Yeah, right around there. You can see touches in here. Yeah, it's sort of in this candle body here. Again, depending what time frame you're looking at, it wouldn't be going through the candle body. But again, with a volatile asset like this, what I would look for is for price to stabilize in this region right here, right in here. Okay, in between these two green lines. Once it stabilizes in that area, I would want it to come up and break this resistance area, break the descending line of resistance, back test it, and come up and begin to challenge these other two resistance areas. So again, you're looking at, let me put it in dollar values for you. What the hell token is this? I'm not familiar with this. This is a really, so you'd really want to stick in this 0.0039 range to 0.0033, stabilize in this area, challenge the 0.009, break the descending line of resistance, and then we'd be off to the races to the 0.055 to the 0.09. That's what I would watch for. That's going to be it. I appreciate the question at the end here by N3 Row, but I'm not going to have time to get to that. I need to. That's interesting. I need to get to. I need to get to dinner. It's almost 7:30 Eastern Standard Time here. So I appreciate everybody tuning in. I am out of my Brooklyn, which means it must be the end of the happy hour, although I've been out of this thing for the past 45 minutes. Could have used a second one. But I enjoyed everybody who tuned in and engaged with me. Thank you so much. Especially in a time like this, it's very really tough out there. Not a lot of engagement in the market. Things are a lot. People are really salty, and it's a tough market in general. And hopefully, I gave you some optimism in terms of how the charts are looking. I really try to do that. I try to be authentic, genuine, and provide some optimism. So, with that being said, thank you for tuning in, and as always, spread awareness and carry the education forward. All right. I will catch you hopefully next week for another happy hour. And now I have to figure out how to end the live stream, which is always a interesting situation. All right, let's see here. So I think that's going to do it. This is a funny thing. You have to click end live stream about 20 times until this thing stops.